Is it really possible to lose $1 million in the Vancouver area in real estate? Absolutely. And I'm going to show you how that happened to an unlucky homeowner. And many others have had very big losses due to not timing the market correctly. Now, it is impossible to buy at the absolute bottom and sell at the absolute peak, just like it is with perhaps a stock or other investments. However, with a disciplined and careful approach, and the tip I'm going to give you, it will help avoid buying at the absolute peak and then for a year, two or three or longer being underwater in your mortgage or in your real estate investment. That's especially painful for people that are only putting 10% down or putting their entire nest egg into that down payment. Now, I remember about 18 years ago, a realtor saying to me around the water cooler, Brad, it's no longer about location, location, location. I'm starting to think it's timing, timing, timing. Now, those words have stuck with me throughout my career, and I've really come to realize that it is important to avoid mistiming the market or buying at the absolute peak. So let's take a look at that unlucky homeowner. Okay, so here's that example I was telling you about. It's in the Buckingham area of South Burnaby, 6210 Buckingham Drive. And this is a property I watched sell a few times. It sold in 2019 for 2.1 million. Well, is that a good price? Let's check what they paid for it. If we click on the tax, we can see they bought it in 2016 for 3.1 million. That means they took over $1 million loss when you factor in they paid property transfer tax. When they sold, they paid commission. Well over $1 million loss just over 3 years. You would think holding a property 3 years, you're going to always make money, right? No, sometimes you can take a big hit. Lots of people really took massive hits during that period. My wife, Theodora, she saw one in North Vancouver where they also took a $1 million hit. I couldn't find that exact one because I couldn't remember the address, but I did a quick search, found other examples. Here's one, 321 Monterey Drive. They sold in 2019 for 1.75 million. How did they do? Well, let's check what they paid for it. They also bought in 2016, 2.45. So this representing a $700,000 loss, even more when you factor in expenses. So it is possible to really mistime the market. It's possible to own real estate for several years and be deep underwater. Now, that's something I noticed when I first started in real estate back in 2005, that some people that were selling in 2005, 2006, did held property for almost a decade and were just finally able to break even. Actually, they'd been underwater for almost 10 years. And it's something that you need to observe in the market, that there is certain cycles, and often from peak to peak, it can be a decade. Sometimes it's shorter, but we've seen that pattern repeat itself. And I'd like to share this chart of long-term real estate, 1977 to 2023. Now, I think it's really worth pointing out that it looks like real estate always goes up. But if you analyze closer in 80, we know in the early 80s, there's a peak here. Look how long it was before those people hit the next peak or started to exceed maybe what they paid for here. It was the early 90s, a 10-year cycle. Then there was another peak in 94, 95, you could say that, 96. And those people didn't break even until 2005, 2006, when they could finally sell for a profit. Now, since then, the chart looks a lot more steep to the upside, but those examples of the $1 million loss were right in here. People that bought at this peak in 2016 and had to sell here in 2019. Now, that's where these charts can be deceiving. That just looks like it dropped a little bit, doesn't it? Would you believe from looking at this chart that that's a $1 million hit? Well, it depends on what price range you're in, what area you were in. So my point is, these charts, well, yes, the long term, you usually always make money if you have a 10-year time frame. But if you have a 3 to 5 year time frame, you have to be careful. So what's my tip after studying this chart and from my experience of how to time the market? Well, let's go back to this. You need to be careful when the market is starting to reach all-time highs and starting to go parabolic. And that's when you don't know if you're buying at the all-time peak, and that pullback or significant correction is just around the corner. So tip, avoid the parabolic, uncharted price territory action. That is when caution is warranted. I used to follow some day traders that really like to do what they call fading parabolic moves. The same principle can apply to real estate. Now, it's not day trading. Day trading is hard. But if the market is getting into territory where it's never been and there's lots of bidding wars, if you can catch the start of that move, the start of when the market's heating up, great. You've timed it very well. But if it's already been a prolonged, really hot market, it's starting to go parabolic or starting to go straight up, and that move has continued for many months, perhaps years, that's when you have to be careful. When you can see that parabolic move in the rearview mirror and the market's already pulled back, that's what I call the safe zone, because the peak's already been established, the market's pulled back. What if you buy? You can be sure of one thing: you did not buy at the all-time peak. Chances are, if you have a 5 to 10 year time frame, prices will eventually exceed the last peak, meaning you'll have positive equity. So that's just a simple tip on how to analyze where we're at in the market right now and avoid making a big mistake that could cost you up to $1 million or more. So the takeaway from studying that chart is avoiding buying when the market has gone parabolic for many months, perhaps even years, is in uncharted territory, and you only have a small down payment or it's your first home. That is time to be cautious. Now, it's different if this is your second or third purchase, you've already got an established nest egg, and you need a place to live. Then it can always be a good time to buy. Timing doesn't necessarily come into play. Same with second or third investment properties, maybe not as important, but especially I urge first-time home buyers, people that are only putting down 10% or 15%. You have to be careful. You can't afford to 1 or 2 years later that equity be wiped out. So when the market is in uncharted territory, it's been going straight up for quite a while, be cautious. Then how can you time it better? These moves can be seen in the rearview mirror. You can see when the market has achieved an all-time peak, has pulled back. That's what I call you're in the clear, you're in the safe zone. Because if you buy at that time, chances are, if you have a 5 to 10 year time frame, prices are going to exceed that last peak. Well, that's what the long-term charts show. They will eventually reach new highs, but you don't want to buy at that short-term high and then experience a severe pullback. I'm Brad Gannon with the Brad and Theo Gannon Real Estate Team. As always, we're here to help you make the smart move.